Good day, everyone. You are welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week, we cover investing in stocks. The Nigerian exchange opened the year on a very strong note, with investors gaining 6.54% or 2.7 trillion naira in the first trading week. As a result, there has been significant interest from new investors. Additionally, the foreign stock market also presents good opportunities for long-term investors in 2024, apart from the edge it provides against the devaluation of the naira. We thought it important to provide more understanding to investors who are new to investing in the stock market. What is a stock? A stock, also known as share, is a type of investment that represents an ownership in a company. A stock is an investment. When you purchase a company stock, you are purchasing a small piece of that company called a share. When you own stock in a company, you are called a shareholder because you share in the company's profits and losses. For companies, issuing stock is a way to raise money to grow and invest in their business over the long term. And for investors, stocks are a way to invest and build wealth over time. Public companies sell their stock through a stock market exchange, like the Nigerian Exchange, formerly known as Nigerian Stock Exchange, or the NASD OTC Securities Exchange for non-quoted shares. Investors can buy and sell these shares among themselves through stockbrokers. The stock exchanges track the supply and demand of each company's shares, which directly affects the stock's price, either up or down. Why should you invest in stocks? Stocks can be a valuable part of your investment portfolio. However, it is important to understand your risk appetite because it has high volatility and is mostly suitable for investors who can tolerate risk. Here are some of the reasons you should invest in stocks. 1. Capital appreciation. The price of a stock will go up or down over time. However, if a company continues to grow and declares profit, the share price will go up over the long term. When it goes up, shareholders can choose to sell their shares at a profit. 2. Dividend income. Some companies pay dividends to their shareholders out of their profits. This is why it is important to target companies that are profitable and will remain profitable over time. Dividends are paid during the year, referred to as interim dividends, and year-end, which is referred to as final dividend. This helps you generate consistent cash flow over time. 3. Liquidity. Liquidity in investment means it can easily be bought or sold. Shares have higher liquidity than other types of investment, save for fixed income investment. Typically in Nigeria, when you sell shares, you have access to your funds on the fourth day, T+3. This is also why you should invest in stocks that can have high liquidity in terms of volume of shares traded daily. How to invest in stocks? 1. Decide your investing approach. There are different ways to invest in the stock market. You can invest in individual stocks. However, this takes a lot of time or requires the help of an investment professional. You will need time to thoroughly research and evaluate stocks on an ongoing basis if you invest in individual stocks, which is our focus this week. On the other hand, you can invest in a stock mutual fund, which is professionally managed by portfolio managers. 2. Set a budget for your stock investment. Investment in the stock market is for the long run. Hence, emergency savings or money you will need in the short term should not be invested in the stock market. You can set an amount to invest periodically, monthly, quarterly, or annually to ensure discipline. This will ensure that you are not under pressure to sell at a loss when the market is down. 3. Open your stock account. Opening a stockbroking account in Nigeria is now very easy with no minimum amount required. You can check for the top brokerage firms with robust online platforms, web and mobile, on the Nigerian Exchange website. The Securities and Exchange Commission has begun to issue licenses to firms to provide access to foreign stocks. The online platform allows you to open your account, fund as well as buy and sell yourself. It is important to confirm the brokerage fee to reduce your transaction cost. Standard brokerage commission, apart from other statutory fees, is 1.35%, but can be as low as 0.5% based on concession. 4. Select your stocks. You should consider the following when selecting stocks. This is not exhaustive. A. Invest in stocks that have paid dividend consistently in the last 5 years. B. Diversify your portfolio by investing in a minimum of 3 to 5 stocks. Invest in companies or stocks across different sectors. C. Invest only in businesses you understand. D. Avoid high volatility stocks if you are new to stocks. E. Learn the basic metrics and concept for evaluating stocks. 5. Manage your stock portfolio. Although worrying over daily fluctuations won't do much for your portfolio's performance, there is a need to check in on your stocks periodically. This is to ensure it is still in line with your investment goals. For instance, if you are approaching retirement, you may want to move some of your stock investment over to more conservative fixed income investment. If your portfolio is too heavily weighted in one sector or industry, consider buying stocks in a different sector to build more diversification. Thank you for listening. Please join us same time next week for another exciting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send SMS to 070-8246-3747. Stay blessed.